Hello and welcome back to goldstocktrades.com. This is Jeb Hanwerger. Today's June 15th, 2016. After the news that the Federal Reserve is not going to raise interest rates, it probably won't raise interest rates this summer. They may not even raise interest rates this year. The GDXJ is up over 4% and possibly going to break into new highs. Look at the $45 price level. That's prior resistance from a couple of years ago. But the 6-month chart and year-to-date chart is pretty significant uptrend. Notice the 50-day moving average. We had a healthy pullback to the 50-day moving average, provided a secondary buying opportunity. Nice gap up on volume as the jobs numbers came out very weak. Will push the Fed not to raise interest rates, possibly not even this summer, and we could even see a weakening of the economy if Great Britain decides to pull out of the EU, and a push higher for gold past the 1300 level. If it breaks the 1300 level on gold, which we might happen today, as the markets are still open. If we break that $1,300 level, we could see even a higher move to the 1550 level, and the GDXJ has been outperforming GLD by a wide margin this year. That may continue to continue in 2016 and 2017. A breakout at 45 for the GDXJ could mean a major move going into the fall in 2017 as the majors begin to acquire these reserves and resources from the juniors at much higher premiums after this 5-year historic bear market where very little has been invested to development projects and to grassroots exploration. We're finally beginning to see financings for prospect generators. I've seen 3 major financings for prospect generators. That means that investors and institutions are looking for new projects, grassroots exploration. Very positive sign for the junior gold exploration business. I've recently been highlighting some and looking at agriculture stocks because I'm beginning to see food prices for the first time in many years, possibly since 2007, the credit crisis, 2008 credit crisis, a turning of the tide in food prices. We've really been in this sort of deflationary cycle from 2008 and the banking credit crisis that the central banks have been moving interest rates to negative territory, quantitative easing, monetary debasement, trying to get this economy going again, trying to increase the velocity of money, and finally we're beginning to see inflation pick up again. And in food prices, we're seeing a breakout and a bullish golden crossover after many year-long down cycle. This could be the beginning of a new bull cycle. So we should start looking at unique agricultural companies. So I recently highlighted a recent investment that I made in a private placement, Potash Ridge Corporation, and a company that has come on as a website sponsor. Very unique company. It has 2 projects that can produce sulfate of potash. Okay, not potash chloride. There's a major difference between sulfate of potash and potash chloride. Sulfate of potash is a premium potash, and in sulfate of potash there is a current supply deficit. The price for sulfate of potash is 3 times higher than regular potash. The global consumption of sulfate of potash is about 5 million tons per year, which is increasing to possibly 10. The existing producers, the reason the price is so high is because the existing producers are not able to keep up with the increased deficit. So Potash Ridge is developing two projects, Valleyfield and Blonde Mountain. The strategy they've come up with is they're going to get into production using the Mannheim process in Valleyfield, and then bring the Blonde Mountain project into production, become the largest North American producer of this sulfate of potash. They released recent news that they're in the environmental permitting for Valleyfield in Quebec, which can produce 40,000 tons per year of sulfate of potash. The initial capex is under 50 million Canadian. Um, Impressive after-tax IRR of 34.7%. And this is a process, this Mannheim process, is used in Europe and Asia. And this would be um, the first producer using the Mannheim process in North America. Sulfate of potash has been a top performing commodity. Potash Ridge has attracted some top notch investors such as Bob Cross, who is the founder of B2 Gold in this year. They've raised a series of financings. And as you can see by the chart, it's pulled back to the 50-day moving average, which was around 31.5. This may be a secondary buy point because I expect that it could be a significant year, especially because the company says that it can complete permitting and break ground in 2016. And if they're able to do that and start generating cash flow, there is the potential that the Blonde Mountain project could get into production in 2019, which could really boost this company to a much higher level as they come into production, start at Valleyfield and advance the Blonde Mountain project. And this is very important fertilizer because it's for fruits, vegetables, nuts, potatoes, high value crops that can't handle the chloride. Corn and grain you can use potash chloride, but potassium chloride. But with the higher level crops, you need this sulfate of potash. So could be an exciting year for Potash Ridge, and I'll be monitoring this 50-day moving average closely. I recently invested in a private placement, and they also are a website sponsor. I also wanted to comment on the uranium sector, which has recently hit 5-year lows, and Cameco has been hitting new lows. But I want to comment that I really believe that these markets are going to turn around, especially in 2016. It just doesn't make sense. The reactors require over 200 million pounds of uranium, and there's currently less than 170 million pounds from mine production. So we're relying on these secondary supplies, 33 million pounds, but there's new reactors being restarted. Japan's started 2 units, more expected. The US has started its first new reactor in 20 plus years. That may not be on the front pages of the New York Times, but the reality is that that's big news. For the first time in 20 years, the U.S. has started new reactors. India is planning 60 new nuclear reactors, while the production and supply of uranium is gotten more and more difficult. 40% of uranium comes from that's used right now in the U.S. The U.S. is the largest consumer of uranium globally. Much of that, 40% of that, comes from Russia, Kazakhstan, and Uzbekistan. And Kazakhstan, which is the largest producer uh, and the large growing producer for most of the past 10, 15 years, is finally seeing production flattening. Meanwhile, these low 5-year low prices in uranium, no new mines or exploration has been able to be funded or developed. So there's all these factors, fundamental factors, that to me tells me that this is the time, while it's out of favor, to pick up the highest quality uranium assets. And this is why I've recently highlighted Energy Fuels. I recently invested in a private placement. I've also owned shares and bought shares in the open market, and they are also a website sponsor. But I've recently highlighted it because it's the leading U.S. uranium producer. And this year in 2016, they're expected to produce 950,000 pounds of uranium. They have conventional assets. They also have the ISR assets that they acquired from Uraners. They have uh, contracts to global nuclear utilities. They sold 1.1 million pounds of uranium at 56 pounds in 2015. And they're strategically positioned in the U.S., which is the world's largest nuclear market. It's important to note that if this market turns around, I expect Energy Fuels to really be the leader. They have one of the strongest working capital positions. They have multiple sales contracts. They have ISR and conventional. They have the mill in uh, the Southwest United States, which is the only conventional uranium mill in the U.S., and it's centered around a bunch of high-grade uranium deposits in the U.S., and it has a capacity to increase production there should the demand rise for nuclear power, which is just a question of if, not when. Uranium is the U.S. is the world's largest consumer of uranium, and the uranium is becoming the fuel of the future, as millions of people are dying every year from air pollution, and billions of people are going to look to for electricity, and especially clean, uh, carbon-free energy. And Energy Fuels could be leading the way on this rebound, which I believe could be near as the U.S. starts reactors, as the Japan starts reactors, and as the world looks for clean, carbon-free energy sources. Looking at the chart on Energy Fuels, it's beginning to break the 200-day. It's testing the 200-day and holding it. I'm looking for a bullish golden crossover and hopefully a breakout above the $3 range, and a flattening of the 200-day moving average, which has been moving down, and eventually a basing and pulling and turning around. We may be a little early, but it's better to be a little early in uranium than too late. Once the move happens in uranium, like it did in 2007, it's explosive, and you want to be. Uh, it's important to be positioned before the move occurs. So that's it for today, folks. Stay tuned to goldstocktrades.com. Thank you for tuning in, and have a wonderful day.